Buyers bounce back in a big way, closing at the point of control of the all-time high supply. Is this a bull trap, or are we just back to the regularly scheduled buying program? And how can we tell the difference in the moment? My name is Lamont, full-time trader, part of the ChartGuys team, where I head up our futures room and the swing report. In this video, we'll go over all that and more, so let's get into it. Alright, so big old bounce after the sellers were unable to negate this breakout. So recall what we were talking about in the previous weeks. We were, one, talking about the fear and greed index being in extreme fear, and typically major highs aren't made in extreme fear. Usually they're made in euphoria, greed. Additionally, the VIX had spiked to 30, and 30 is just like a pretty common area where price typically tends to recover a bit. So we weren't very much convinced that the sellers were going to press the issue here, but we still have to take things day by day. Things can always be different, so we had to keep assessing the situation. And that's the same thing that we have to do going forward to see whether or not this is going to be a bit of a bull trap here, or whether or not it's just right back to the regularly scheduled buying programming. And it's going to be primarily what happens next week at 673.95 and 683.36. With 683.36 being the point of control of the all-time high supply, this is pretty much exactly where these buyers had problems last time they were testing the all-time high supply. And after we reject from here, it's just like what happened over here. What do we care about? We care about whether or not the sellers can then negate the next breakout point. So if this breakout over this high is negated, the next thing that we should care about then is the high of the next relevant area of demand, which was here. So we were watching these four lows. They do break below it. They could not find acceptance under this high, 652.21, which means that this breakout continues to be affirmed. And so what we were talking about in prior weeks with the analog of this area being very similar, or this area relative to this move being very similar to this area now being relative to this move, in that as long as we're holding over the local daily demand zone, then these buyers are doing okay. So we opened right at the point of control, the super key test, right, of this local area of daily demand, and the buyers just ran away with it for the entirety of the week. So these buyers are looking just fine next week, as long as they can keep holding over 673.95, and technically they'll be on the offense again if they can get back over 683.36 to flip this supply into demand, which would then have these buyers position well for new highs. And so that's pretty much it. That's how we're going to assess whether or not this is a bull trap, or if the buyers are just picking up where they left off here. Okay. Lots of space for a daily high or low. Anything over 650.85 will be good for one. I think we had trade zones. So the sell zone is, we're very much in there right now. If these sellers are going to try to press the issue here, it really should be here. Now, the sell zone is really primarily for, I would say, folks who are very net long and are looking to hedge. Essentially, that's the only way that I would be interested in hitting the sell here. I actually did a buy off the half-day setup, but it's not really in the scope of these videos. And I think we had, that's the old one. And that's pretty much it that I'm looking at least. So in the near term, if we were to retrace, I think it's reasonable to be looking for buys again. So something along these lines over here, like this. Apologies if you can hear my dog barking in the front. I think she hears the cat Parker. He's messing with some plastic underwear clip, I think. I think that's what it is. Otherwise, I would be more concerned. So something along these lines, I would say, is pretty reasonable for a pullback play, looking for this demand zone to continue to be affirmed against its point of control. And essentially, this is a higher low play. So the volume really picks back up around 671.75. And then, of course, there's a bunch of 662.76. So I'm thinking it's something along these lines, pretty reasonable to be looking for a buy to retest this point of control next week. The volume is a little janky right now. As you can see, this little symbol here, we're getting CBOE data because the CME is has some overheating issues, whatever that means. I guess their servers are having problems. So, just excuse these janky lines for now. So there's a little bit of relative weakness in the Qs, which, it's like a slight red flag. I wouldn't even call it a red flag. I guess just call it a yellow flag. And, what we care about is there like rotation, right? How is healthcare doing, right? Is healthcare holding on strong? It absolutely is. What about finance? Finance is, very strong bounce out of this demand zone. So, the fact that the Qs are kind of lagging a bit, not really that big of a deal, particularly if like XLV and XLF can maintain their relative strength, and that's probably going to act as a tailwind for the overall market. And it's really not even that much of a laggard, right? The idea is that the buyers have been able to, the ES and the SPY buyers have been able to touch the point of control of the all-time high supply, whereas the QQQ NQ buyers have yet to even test the low of it at 624.03. So I'm thinking next week, if this is going to be, back to regularly scheduled buying programming, the buyers should defend the value area high here. They don't want to let these sellers find acceptance back under the value area high 609.47, and ideally what they'll do is crack into the all-time high supply, the low of which is at 624.03. That's pretty much it. Space for a daily high or low. Anything over 580.74 will be good for them. I think we had a sell zone set up as well. Again, if these sellers are going to press the issue here, they really need to get to work sooner rather than later. That's the yellow trade zone already. And then a buy, again, I think is reasonable again to be scouting these buys here. But you know what? I think the ES is honestly a better choice. I think it's reasonable to be looking for it in the Qs in a very similar way. But if I had to pick, I would probably pick the ES just because it has that relative strength right now. Yeah. Moving on to the rut. The rut, this is honestly a pretty good look, I would say, for the overall market, because recall what we were looking out for. We were looking out for the potential that the sellers would find acceptance back under this prior all-time high structure, which would increase the potential then that we are looking at a look above and fail, a pop and drop on a very high time frame, and that would have us looking for a rotation back down to the lows of this big old range. But right now, this move is really large. It honestly had a lot of relative strength last week, finding a lot of acceptance over 240.88, the point of control of this prior all-time high structure. And so next week, as long as these buyers can hold over 240.88, then they're looking just fine, positioned well for new all-time highs here. So I think pullback play on the rut is also quite reasonable. The relative strength in the rut very often wanes, but right now, because XLV and XLF is kind of leading the way, as long as that's the case, the rut should continue to see some relative strength. It has more healthcare and finance holdings. It's still primarily a tech holding, but like obviously it's not the same as like mega caps. I think if you hold this area like this, hold these 2 point of controls, keep affirming this point of control particularly as demand, then you're probably looking at a test of the all-time high. So I think if you're looking for a pullback play in the rut, essentially this is essentially a daily no change level right here. So I think this is pretty reasonable, looking for a pullback play. Essentially, this is responsive trade, like just like all of this chop over here was just defending the low of this guy. I think we can keep looking for plays like that, because if you get caught up here, if the buyers get caught up here, they probably try to retest the lows of this range again. So I'm thinking something along these lines, looking for responsive trade, pretty reasonable. I don't think we had a sell set up here. No, that's an older one. No, we didn't have anything else set up. So that's pretty much it for the rut. And then moving on then to the Dow here. So the Dow dip into this trade zone again, didn't get to our more conservative trade zone, but held the original, right? And so I would say, I think you can, I would book some profits, honestly, right? This is a good enough move right from the middle of our more aggressive trade zone that it's reasonable to just take some profits off and walk your stop up to here, pull this lower bid, and then ideally you'll get some like daily balance and breakout before walking a stop up again. The daily no change level is this guy over here, 469.03. So this breakout being affirmed as long as these buyers can find acceptance over 469.03, and then if they can just keep affirming this guy, this point of control at 462.83 as support, then they affirm this structure as demand, keeps them positioned well for new highs. So honestly, I think you can even recycle this trade zone, because if we're looking at some bigger picture chop, like something like this or something like this or something like this, or even something like this, then, or something like that, then very often you'll see that same zone get tested over and over again. Okay, so that's pretty much it. Lots of space for a daily high or low over 457.71, assuming that's all correct. I think that should be correct. Like, these levels should all be correct. It's just the matter of the volume is a little bit different because, again, we're getting CBOE data right now. So that's pretty much it for the Dow. And then moving on to the dollar. So like I said, the dollar, I still think pretty reasonable to be looking for sells against using both of these, excuse me, for trades, using both of these buy zones, just looking for a responsive trade against these two major structures here. And as of right now, we're just still kind of in no man's land. I mentioned last week that it's probably safer. It's probably more positive EV if instead of just scaling into it this time, instead of that, looking for a potential pass back under 99.80. So something like this, not a lot of follow through above it, roll back down under, sell that, stop it straight, try to get here and try to get here if you're more of an active trader. If you're not, you want to just use these zones as such. I also think that's quite reasonable. And even if you were to, even if it were to not work on this attempt, it's already got you one here, it's got you one here. It's a game of probabilities, right? There's no guarantees. So I think still reasonable to be using these two trade zones for responsive trade. Space for a daily high or low. Technically, it's set. Well, I mean, you broke over the prior day's high, so technically this higher low here at 99.325. But space for a lower high under 100.350. Anything under that's going to be good for that lower high. And if you keep failing to get back over 99.800, then the odds of us doing more of this kind of balance would increase, and then we will probably be looking for another test of the next key area of demand, which again is just down here. You can already see the market's already told us how important it is over here, over here, over here, yada yada yada. All right. Moving on to gold. So gold, again, affirming this breakout there, these buyers are doing just fine. 4046.5. I think we had another trade zone, right? Okay, so barely dips into our trade zone there. But like, essentially all this is really just responsive trade zone, right? Because it's balancing. So right now, if you are a more patient buyer, if you didn't play over here, buying a pass back over the daily no change level, then it's still reasonable to be looking for a pass back over the developing value area low, assuming we roll over and test it again, because again, this is really just bigger picture chop right now. So whenever something is balancing, responsive trade is appropriate, and you can approach responsive trade with these volume tools in two ways, primarily two ways at least. Obviously there's an infinite amount of ways, but primarily in two ways, wherein you're looking for the key demand zone that's supporting all of this balance, which really is this guy, right? This is the guy right now who has made the low of all of this chop over here, and then the supply zone is this guy. This is the structure that's made for this high over here. So responsive trade would suggest that you're looking to bottom fish off of the lows of this range, ideally using this structure that has already, the market's already told you that's what it cares about. So you're either waiting for a move back down to test this fella again, or you're waiting for something along these lines, break under the developing value area low without a lot of follow through, pass back over it, buy that, chop it up no later than the development point of control, chop it up again at the developing value area high, and then see if these buyers can break out of this range to do something kind of similar to what's happened back here. You can see how the that pass back overplay, the development value area low, shakes out quite well over here. Technically this is it might not have been there, right? But visually this is a good representation of that. So that's really it for gold. Lots of space for a higher low. Anything over 4022.260 is going to be good for one. And again, these buyers are affirming this breakout as long as holding over 4046.595. NVDA is showing us some relative weakness, but there are other Fangman T names that are holding up just fine, like Apple, which was one of our swing report picks from back here. I'm in from a little bit higher. Google is also pressing the highs. So, it's not like a all-out sell-off right now. So there's rotation within tech as well, which again leads me to believe that the market is doing okay. At least as of right now, it's not in a very precarious spot, I would say. As long as you have some, Apple is like 20% of the S&P, I think, something along those lines. It's a very large part of the S&P 500. So if Apple is strong, it's pretty hard for the overall market to be weak. So I'm thinking hopefully these buyers, I think we're back in that trade zone again, right? Yeah, we're back in this trade zone. I still think this is reasonable, but again, personally, I would be much more interested in seeing some like daily, weekly oversold conditions into over here. But I think as soon as we get daily oversold, I would be interested in at least selling some cash secured puts just because we haven't been daily oversold in a long time and it should be a back burner setup, as Dano would say. So I still think this is very reasonable for more aggressive operators looking to just play off of this demand zone. But like I said, I would be more interested in down here. All right, so 177.69 is going to be key. That's just the point of control of this local daily demand zone over here. If these buyers can just keep holding over the demand zone, the point of control of this demand zone, then really there's no problems at all. This is just some healthy consolidation. Moving on to Bitcoin. So Bitcoin, this is a pretty notable balance. It's also notable that the sellers did not make it down to this major area of demand. Should be the next structure that they're trying to get back to. And at this point now, we're back over the point of control, 89541.25 of this guy, which I still like as a reference, because you know we're this guy just the market told us how important it was in the past to ride all of these lows, making these highs over here. And I got a question last week regarding, okay, well, why don't we care about this guy anymore? I just don't love this guy as much for a couple reasons. One, it's kind of in the middle of this much larger range over here, and we've traded through it. So when we hadn't traded through it and we held the back test of it over here, that was a much better reference, right? Because essentially this guy was acting as like the point of control, essentially the proxy to the point of control of all of this. But now that we've traded through it, I think we should care more about this guy, which the market has already, again, told us how important it was. Now, that being said, I'm sure if we were to mark this up, there's, this is probably a rejection as of now from, one of these key levels, but still, I would choose to, put more weight on this guy right now. Additionally, this breakdown is not yet negated. So this is a very notable, like 15% bounce or so. But this breakdown under 98.892.97 not yet negated unless acceptance back above. So this is a good start for these buyers, and what they want to get done next week is to just establish a higher low, ideally over this local low 80524.65. Ideally, you don't allow acceptance back under 89541.25 to affirm this fella as demand, which would then have us expecting more price action like this. All right, so that's pretty much it for Bitcoin. I don't think we did any trade zones for Bitcoin, not recently at least. Yeah, I don't think so. And I wouldn't still. Like, I would prefer to be a buyer in Bitcoin because it was the leader. But as of right now, I don't really love this as a buy. Personally, I would like to see like a big old move back over 9892.97. And then that would allow for there to be extension on a back test of this guy. And then I would be more keen on looking for a back test of 89541.25 for a buy. Moving on to Ethereum. So Ethereum got to our target from this original trade zone. Again, by now, you should have taken profits. And this is a notable failure for the, you should have taken profits and your stop can be over here. If you really want to give it a lot of leash, then you can leave your stop over here as well. And then this is the potential add area, right? Because this is the, a very, very notable area of balance here, significant area of balance. There's a lot of value that was established here. And this was essentially affirming this guy as supply. So, this guy was very significant where we had three major tops that were set here. And now this guy's kind of acting like a proxy. So if these sellers are going to play defense, again, in this very similar location relative to this structure, then it should be somewhere around here. So looking for the add in here, trying to play back down to this point of control is, I think, very reasonable. Very notable that they did not come and touch down on this point of control. This is absolutely the next area of significant demand that these sellers should be trying to work through. So very notable that the sellers failed to get back down there. Again, I think it would be very reasonable to be looking for the add here. They are trying to negate this breakdown by getting back over 3055 even, but they have yet to do so right now. Tons of space for a lower high. Don't care about this dinky one. Anything under 3658.38 would be good for one. And for higher lows, anything over 2620 even is going to be good for one. And I think the best case scenario next week for Ethereum buyers is to just hold back over 2880 so that they can keep moving prices higher relative to this prior area of demand. And again, I still think this is a pretty reasonable location to be looking for a sell. Essentially, it's looking for a weekly lower high to stay within this much bigger picture balance. Because if you reject from here with a lower high and then break the lower lows, there's no reason why we can't just do this big old picture balance as well. All right. Moving on to CCJ. So for CCJ, again, I think we're likely to come and test this eventually. I still that's still what I'm banking on. I never know, right? Like I never know whether or not price will actually get there. Nobody knows, right? And if they tell you they know, they're lying, and you should not believe them. So I never know, right? I only know where I would be interested in taking trade. It's like fishing, right? Like you don't know where the fish will. I mean, they do have those like radars or whatever or sonar. I don't know what technology that is. Those scanners that people fishermen use or whatever. But assuming we don't have that technology, you never know, right? Like you don't know if the fish are in a location, or I guess hunting or whatever. Like you don't know if there's going to be game there. But you know where you're willing to wait, right? You're probably willing to wait by a game trail or by a watering hole, or if you're hunting polar bears, then maybe that like abandoned research center where a whole bunch of polar bears moved into, that's probably a good spot. But why would you hunt polar bears? That's like one of the few bears that actively kill people. I guess that's a good reason to hunt them, but don't do that. Poor polar bears, losing their environment. This is getting to be a weird tangent, but anyway, that's the idea, right? You don't get to know whether or not price will ever get there. You don't even get to know if the trade is going to work. You only get to know where you are willing to play, how much you are willing to risk. That's it. And then it becomes just a game of probabilities, right? Like a sport, poker, whatever, same. So anyway, I'm most interested in looking for the back test of this prior all-time high structure and this very large area of demand. But like I said, more aggressive buyers using this trade zone, I do think is quite reasonable. I guess it's worth testing this. It's not that much info, so I guess data. I guess it's worth testing. I should test that to see what the expected value is. But it's already moved up so many times on the daily time frame that I don't know that I would care to try this setup again on the weekly or the daily, really. I don't know. I guess it's worth checking it out, measuring out the expected value. I don't know. We'll see. Either way, from a pure volume profile perspective, again, I care primarily about if these buyers can play some defense here. All right, so that's it. Get on to trade review, I guess. All right, so I didn't trade on Monday. I often don't. Usually I set appointments. Definitely won't be trading next Monday. Got to take my little buddy to radiation. Not my little buddy, but a little buddy of mine to radiation treatment while their family travels. So I just like to leave my Mondays open for stuff like that. You never know. If not me, I don't know who could have done that for them. So, it's that's why we trade, right? To have flexibility with our schedules. So anyway, I don't trade Mondays, but I very often will still do the morning rundown for the futures room. So if you're interested in joining a group of futures traders, or just in general, like we have a much more active stock room than futures, but I hang out in the futures room, and so I'll always do like an overall market rundown. And so even though I didn't trade, this is just the the transcript from, or part of the transcript from the update. I just wanted to highlight this because it's very valuable to look ahead and think about the session from the perspective of change. What kind of change is occurring? And so on Monday, I was talking about the ES here, and I was just saying from a session to session perspective. I like how they put the number 2 there. I think we should care about the 6647, right? So this is the higher high that the buyers fail to hold above, and so they want to keep affirming this breakout over 6647. So that's this guy over here. That's this guy over here, right? So this is Monday, right? And again, this is the pre-market. I'm letting you guys know, hey, this is the breakout over this high that these buyers want to get back to affirming. They failed to affirm it at the end of the day yesterday, but now you have a strong open over this guy again. So if these buyers are going to try to pick up where they failed yesterday over here, they want to pick up where they left off by affirming this breakout. They should try to defend this high over here. And so that ended up being the low of the day. So if you're interested in getting these kinds of updates, pointing out areas of change, meaningful areas of change, then check out the community. Links in the description below. I think our Black Friday sale is still going on for a little bit. I don't know the details of the sale. That's not my responsibility. But I know there's a sale, so check it out if you're interested. And and as always, I'll always call out any activity that I do as well in the futures room. So the next for on this day, I didn't post a transcript, but the key level for change on the RUT, I think, also was a very similar situation. I think on the let's see, yes. So over here, we were talking about it as well. As this is this for this, it's the same logic, right? This is the breakout that these buyers should be trying to get back over. And if you zoom in here, I'll just zoom in like this. 2380.6 is that level. It's over here. You can see how these buyers, they battle it out for here. So again, just always think about the market from the perspective of change, and then that is really helpful for identifying key location that you should be willing to play at. I think it's just so much easier than, doing. I've tried many different trading systems, and I like a lot of them, but really, in my opinion, this is the easiest, most straightforward, it's a very, I shouldn't say most, but it's a very logical way of looking at things, right? And you don't have to kind of like put your faith in like synthetic levels, like a moving average or a favorite tradesman. Those are technically like a little bit more derivative than, looking at these just horizontal levels. Technically a horizontal level is not derivative at all, so I rather like that, just trading pure price action. And just thinking about the market from the perspective of change. Anyway, so the next day, I sell the RTY against I was targeting the daily point of control backtest. Okay, I remember 1125 is over here. The daily context is like this. Hang on a second here. Oops. So on the 25th, we are here. And so I'm thinking, all right, this is a pretty sizable bounce, but we're watching that prior all-time high structures point of control. So I'm thinking there's the potential that these sellers defend this point of control like the buyers did over here and they did over here. So I was thinking, okay, let me try to hit this sell here, especially if we straight shot to this value area high. That's what I was thinking, right? If we eyeing a RTY sell, if it's a straight shot to the daily value area high, because at this point, things are already getting pretty extended. So I thought if we just keep running up to that level, I think pretty reasonable to be looking for a fade there. And I did hit one later on, but before that occurs, I just try to sell under the overnight high. And I think this trade is, even though, obviously didn't see follow through because it was the wrong direction, but I got paid quite well for these attempts, even though bigger picture, they didn't shake out. And I think the key idea here is to use targeting, is to be mindful of targeting. Don't try to nail like a home run or whatever every single time. The trade-off is that I will often not be at big size when there's like a massive move. But I find that the lesser the, I guess, frequency, like the range of swings, for me at least, I prefer to be like a more slow and steady approach. But if you're different, then obviously adjust to taste. But that's what I like. And you can kind of see what I'm getting at here, because the targeting for both of the cells on this day made it such that I pretty much nailed these local lows. So I'm getting paid for these attempts where I'm wrong bigger picture, but I'm right on this initial move. Again, this was like a 4-figure day, nothing like a crazy 4-figure day, but still a 4-figure day for like 30 minutes of work. That's hard. I think that's hard to beat in many professions or whatever. So let me just walk you through it here. I was eyeing that RTY sell, but before that it shakes out at 942. I just sold the pass back under the overnight high. My logic was just, okay, well, like we're struggling here at the overnight high. We moved back below it, and then at 942 we kind of pop and drop here. So it was pretty reasonable to be looking for a back test of the daily point of control. So I'll zoom into this day over here, and you can see what I'm talking about here. That's over here. Here on the 25th, here's that overnight high failure, right? This is the area where we take our trade, because you have this little bit of local supply. It's at the overnight high. So that's over here, right? The structure is exactly the same. And then the first chop, I'm just looking for that back test of the daily point of control, which we do pretty much rush right to get a chop there. And then the next exit, I'm looking for it at the let's see, looking for more out at the regular trading hours high. So the regular trading hours high, obviously just yesterday's high. So you take another chop there, and then that's 10 points. That's pretty solid. and then that's pretty much the low of the day, right? So again, I've got it wrong directionally, bigger picture, but because I'm not like aiming for a home, I mean, don't get me wrong, like if everything was aligned in our favor, like if the session to session perspective was also weak, then we could probably try to hold out for further targets. But when it's not the case and you're kind of being a more aggressive buyer, aggressive in the sense that you're going against the direction that value is moving from one session to the next, then it's reasonable to be more conservative with your profit taking your targets. And it certainly worked out quite well on this session. And then this move is straight up to the daily value area high. So remember, the original trade idea that I was looking out for is I'm eyeing a RTY sell if it's a straight shot to the daily value area high. So that doesn't shake out for my initial trade over here, and I was willing to take that shot just to backtest this guy. But it shakes out again. It's even honestly kind of even better context, because I was looking for a straight shot from here to test the value area high for a potential fade, and this is a lower low that gets there. So just a huge 1 minute stair step. I think very reasonable just to hit the sell back under the value area high, give it a little bit of wiggle room. So that's what this is over here. So I stopped the RTY runner at 9:57, and then a few minutes later, like 6 minutes later or so, I just sold it against, that's at 10:03, so that's over here. I was a little bit late to update because I was just chatting with Funko, and now that he's in Thailand, it's like not as easy to chat or whatever. So just trying to take some time out of the day to catch up with my bud. So I apologize for the little bit of the late message, and then I took a chop at the Diva. That's over here. So take a chop of the Diva, out more at the overnight high, and I think I staked this one. Okay, I'm looking out for more at the overnight high, and that's 10:04. So I have to ride through all of this, and it looks like it's going to stop me out, but it doesn't. And again, look at this targeting. The targeting is right. The low of this move is right at the overnight high. Again, why? Because that's just an area of change, right? Like the overnight high is important for a couple of reasons here. Not only is it important because it's where the overnight buyers are potentially being affirmed or negated, right? If the cash market buyers are in control by holding over the open, then they're not really that confident unless they can hold over the overnight high, because the overnight high is as far as the overnight buyers could take it. And if the overnight buyers, which are low volume buyers, are stronger than the cash market buyers, and the cash market buyers can't be that strong, right? This is again very logical. So very reasonable spot. Not only is it the overnight high, but it's also the development point of control, right? So if these sellers want to get positioned well to move value lower on the session, then they need to get under the development point of control. That's some confluence there. And it's this prior supply zone now acting as demand, which already flipped into demand over here. So, there's three reasons why the market should find this to be a potential spot of interest, right? And so if you're looking for more profit taking, even though it's not that many more points, this is 8 points, there's only 3 points more for the chop. Still, I'm trying to be reasonable here with my profit taking. And again, that ended up being a very wise, prudent move, in my opinion. And then the rest of the day, these buyers just ran away with it. But I don't like to work past like 10-ish or so I didn't do anything for the rest of the day. And then on the 26th, let's see, 26th was here, and this was a gap up day. So the 26th, the daily context is like this. It was our gap up day over here, and the logic of this was just to go with a gap if it doesn't fill right away. Those are just the gap guidelines, because the first objective for the sellers, if we're gapping up, is to try to fill the gap. And if you can't fill the gap and then move back over the open, the first place that the buyers should try to get to is the overnight high, just like we were talking about before regarding, okay, why should the cash market buyers care about the overnight high? Because it's a big test, right, to see whether or not the cash market can be as strong as the relatively weaker overnight market. So I just bought this pass back over. Oh, did I not do my homework? I did. Where are we at here? 11:26. All right, so I just buy this pass back over the open here, chop it up at the overnight high, chop it up at the right on 9:30. I let him know, and I forget, Yasser, I think, made this trade as well. Shout out to Yasser in there grinding every day, even when his Toronto Birds get crushed in the World Series. He's still there crying, but he's there. The tears lubricate his keyboard, and he just soldiers on. Sometimes from bed, but whatever. So gave it some wiggle for 1.5, chopped it up at the overnight high. And then I said I was looking out for more under 6817 because that's just the low of the 1113 opening range, right? So on this day over here, if you zoom out to the left here, the 6817 is this guy. This is the opening range of that day. If these buyers, it's probably easier to see from over here. Let's see, 6817 is over here, right? So we're again, the market is just always trying to affirm or negate prior sessions. So if we're going to not fill the gap, not come back down here, right? Then what should these buyers be trying to get done? They should be trying to affirm all of this, right, as demand, right? Because if you're not going to get back into this session, then we're right back to trying to negate all of these days that were supply. And so the next area of change should be here, 6817. That's pretty much exactly where these buyers stall out for the morning, right? You pop and drop here, can't hold over it, roll back down under it, stop me out over here from the runners, and then that was it. It's still a decent day. And there's definitely solid deval plays later in the session. These are really great deval plays, and these were very reasonable plays because for the same reason, they didn't fill the gap. And so if you don't fill the gap, then what should we expect? We should expect a gap and hold kind of a day. If the sellers can't fill the gap, but the buyers can't advance either, what should you expect? We're going to expect some sideways trade, right? And sideways trade, when the daily chart is breaking out and values moving higher session to session, who should you bias, right? If you're going to look for a trade, you should probably look to bottom fish the lows of the balance, because the low of the balance might just be consolidation of this breakout. And if it is just consolidation of this breakout, then you might see follow through, which is absolutely what happened. Honestly, it would have been a monster day, but it is what it is. Again, I just don't care to trade later in the session. Just from an energy perspective, I just like to be chill, work for like 30 minutes or so, work for like an hour, do the morning prep, and then do some morning trades, and then just be done with it. That's my personal preference. I find that it's preserves my energy level as well. I don't know, I guess I'm getting older, but my energy levels, like, I don't want to, it's kind of like trading can be very addictive, and I think it's important to regulate these things. It's kind of like your phone, right, or whatever. It's like kind of a pet peeve of mine, people who are like too addicted to their phones, because like essentially the phones have like hijacked your dopamine loop, or like your dopamine process or whatever. It's kind of like that. Trading can be like that. It's very exciting, right? And so if you're like constantly scouting trades throughout the entirety of the day, you might have some better or you might get some better expected value, but is it worth it to be like drained every single day? I personally, I've been there, right? And I know exactly what it's like. And I'm just a miserable guy. Like, I'm not as nice to my friends and family, and I'm not as nice to myself either. Like, if I grind all day, trade all day, you're like super wired. At the end of the day, if you like don't lift weights, you don't get in the gym, you're not playing with your cat and your dog, making sure that their lives are enriched, you're not talking to your wife, right, or whatever, getting out, getting some sun, talking to your friends, then I don't think that is worth it. I really don't. So that's pretty much it, my friends. Appreciate y'all tuning in. If you are interested in the swing report, which is just 2 novel ideas sent to your inbox every week, any trades that I do take, I will post updates for. I don't take all the trades, but at least this year, the trades that I have been taking, they have very long hold potential. That's like MU, that's RTX. We've been in that and an ad for a long time. Apple. What else we got? That's some more, I forget. Either way, if you're interested in that, check out the string report. Links in the description below. Otherwise, appreciate y'all tuning in. Thanks for sharing some of your time and energy with me. Hope you enjoy the rest of your weekend, and I hope to see y'all next time